Hello and welcome back. Today's topic of conversation: who in the world pays 100% interest rates? Anybody? Renters do. That's right. If you pay rent, you are paying 100% interest. So currently, and this is October 27, 2023, interest rates across the board, whether it's commercial loans, residential loans, have gone up to an area that we haven't seen for probably 30 years-ish, 20 to 30 years for sure. We haven't seen interest rate markets like this for that long. And of course, some of us got accustomed to that lower interest rate, and others are starting to feel the repercussion of the higher interest rates now. But the point of this conversation is if you're a tenant or you're a renter, you pay 100%. Now we can talk about those that have credit card debt that's revolving, that's paying 19, 24, 32% interest rates. Again, mortgages are at today's rates 8.25% on the conventional side of business. In-house loans on consumer or commercial rates are about 8.5%, maybe pushing 9% with the Fed, the way they're bumping things around. But at the end of the day, tenants, it doesn't matter what the interest rate environment is, tenants will always pay 100%. So when you rent, you pay to occupy the space that you're in, whether it's for you or your landlord. Choice is yours. Simple as that. Now, that's in the residential world. You're never going to see that money back. You're not going to get any tax write-offs unless your accountant's creative, all of which that's not a topic for myself. But in the business world, you can rent and have some tax advantages. And so we see, a lot of times we see businesses that rent, and they're very healthy, strong businesses, and they have a financial plan that encumbers renting versus owning. But on the residential side, the only real advantage of renting on the residential side is, from at least what I've seen through my experience, is if it's short term. You're only going to live in a community for less than a year, less than 2 years. But anything past that, you really need to ask yourself, should you invest in purchasing versus renting? Regardless of the interest rates, right? Because if you're renting from a landlord, there's a good chance they got a mortgage against the property, so you're just paying the rent to cover the mortgage plus a little markup to satisfy their profit margins and their capital gains and blah blah blah. So it'd probably be cheaper to own the same property. But again, if you're only going to live in a community for a short period of time, that's where renting has some advantages. And it doesn't matter what you're paying, because living in a community for a short term or a short period of time isn't going to allow you the opportunity to enjoy the appreciation of real estate or the ebbs and flows of real estate. In fact, you might get caught in a position where the real estate market dips, and now all of a sudden you're upside down on your mortgage. So I get it on the rent side. Like short term, it's beneficial. Long term, you really need to sit down and ask yourself, is it really worth it? Now, diving into that, bringing up investors, I want to bring up another point here while I was thinking about it. It seems to me one of the big questions the last 2.5, 3 years has been, where's all this money coming from? Why does everybody have all this cash driving up our local markets? Rural USA is getting penetrated by people from the coastlines. And the stories go on and on, like the narratives change, but the bottom line is this: the COVID-19 experiment has brought buyers to the table we've never seen before. People are moving inwards to the center part of our country, and they're bringing cash. Where's this cash coming from? That's always one of the great questions, and for some of you, probably a little bit of a mystery. So let's dive into that, because it ties right into what we're talking about on rent. Anybody that has a computer and has access to the internet can type in a little Google search called Top 3 Institutional Buyers of Real Estate. I did 2023 because that's the current year that we're in. But you can do this for any given year. And Google will auto-populate the top 150 investors, institutional investors of real estate, worldwide, nationwide, however you want to break it down. But my point is this. There are institutional buyers or investors that are buying up single family homes. They're buying up fourplexes, duplexes, apartment complexes, big plexes, small plexes, whatever. They're buying these things up and they're spending them and renting them back to whoever's living in the community at the time. Who is an institutional investor? Let's dive into that first. Institutional investors include large companies with excellent purchasing power and great financial weight. What's that mean? They invest in real estate from pension funds. They're investors from pension funds, banks, endowment funds, hedge funds, insurance companies, just to name a few. So stop and think about that a second. If you're invested in a retirement fund, or you got somebody, I'll just throw it out there. Somebody else is managing your retirement funds or your investment portfolio that's non-real estate associated. You're likely investing in real estate. It's just on paper. These people that you invest in are turning around and buying real estate and turning around and renting real estate back out. So institutional buyers are a very large play in the marketplace. We don't see it so much here in rural USA, especially in the location of Wyoming where I'm at, but they are heavy hitters in metropolitan areas and other states across the union. So to answer one of the big mysteries of where's all this money coming from, the answer could be you. Like, you could be invested in one of these funds, one of these banks, one of these insurance companies, one of these 401ks, whatever, and the money's coming from you through these companies because they're managing your portfolio. Now you do some, if you did the top 150 in the world, you got to get to number 5 ranking before you find a company that's from the United States that's a heavy hitter. These others are from other countries in the world, and rightfully so. Like with the globalization that we're in due to access to the internet anymore, the scope of this has all changed since the 1990s. So think about where we're at with the interest rate market. We haven't seen interest rates like this for 20 or 30 years. And then you factor in globalization with the greatest invention since the telephone called the internet. Now all of a sudden you could be from anywhere in the world, and if you got the right pot of funds, you're a major investor, and you can be out buying tangible property called real estate just like everybody else. So do yourself a favor. You can Google this or search it out on your search engine preference, however you want to. But the bottom line is, people that are renting really need to ask themselves a few questions, some hard questions. And I'm going to challenge that. Like, are you paying credit card debt? Is that interest rate 15%, 20? I guarantee it's not 8. Like right now, mortgages are 8%, 8.5 or 8.25. Sorry, doesn't matter. In between 8 and 9. If you're paying rent, you're paying 100%. So how long are you going to do that for? You got to really sit down and wonder are you making some good choices? All of which we'd be glad to sit down with you and entertain those conversations. Like as realtors, uh, you know, a good qualified realtor could navigate some of these ebbs and flows for you in your personal financials and look at things as an investment portfolio for you. So if you'd like to have that conversation, get a hold of us. We got institutional investors out buying. That's going to be part of your competition, and if they're not, the people they buy out could be your competition to purchase. So how is this all affecting you trying to move forward in buying real estate? And from a seller's point of view, hopefully some of this gives you a little light on where this cash is coming from, where this money's coming from, what's driving the market. I mean, this is just one small aspect of what's driving the market right now. And I think, obviously we don't have the crystal ball, but there's a chance that interest rates, even where they are today, are not going to have an effect on where real estate is selling. It's easy to get down a rabbit hole that says, well, if interest rates go up, prices are going to go down because affordability is only X. I think you got to step back a little bit and analyze a few more factors before you can really settle on that's going to happen. Some of these other factors come in place. Some things would have to turn out differently for that to happen, which it could. I mean, obviously it could. Markets change. We know that going in, doesn't matter if it's a stock market or real estate market or any other, could be commodities market, whatever, it's going to change. Could go up, could go down. But as we sit today, these are some considerations that you, at least I would challenge you to kind of have top of mind. So anyway, hope this helps, and you find this informational. And like I said, if you ever want to talk about buying and selling, we're here. Give us a call, text us, email us, whatever, and hope to catch you on the next video. Talk to you later.